her that I need me a wife. And I tell her that I need me a wife. And she told me that she need her son. And she told me that she need her son, right? I'm like, hey, are you alright?
What's poppin', and welcome to another video of the Market Maker SA. Today I'm going to be sharing a interesting video about a huge confluence that has increased my win rate massively, and that is the ICT market structure. And in this video I'm going to try to simplify it in the best way I can, just so you guys can understand it in the easiest way. And yeah, with that being said, let's get to the video. Before we go any further, guys, I'd like to tell you guys about today's sponsor, FXIFY, which is a great prop firm which offers both forex and futures trading. But what I love about them the most is that they have a 90% profit split and 5 different challenge options you can choose from with very reasonable prices. We really suggest that you do check it out. The link will be down in the description below. And now, understanding market structure is very easy, simple. The market can only do three things. The market can move up just like this, continuously creating new highs, or the market can move down, continuously creating new lows again and again, breaking structures and etc. Market does that. As you can see right here, I have a open on GBP USD. This is the M3 chart, and here's a chart example of a bearish market. It started right here. As you can see, we're moving up. So there, market decides to go down. Doesn't. What I want you guys to note is that it doesn't break this low. Doesn't break that low. Goes down, doesn't break that low, but then skyrockets, moves up. As you can see, does this right here, and does that. Basically, this is all the market does in a bearish market. Let me show you I meant a bullish market, forgive me. Let me show you guys a bearish market, if I can find one right here. Okay, here's one right here. Open it up. This is a bearish market. So as you can see, the market is going down, creating new lows, lower highs, not breaking that high right there, that lower high right there. It's not break, doesn't even really want to come close to it. But yeah, as you can see, going down again, goes up. Basically, this is something that constantly happens and is a key confluence in making me understand the direction of the market and what setups I should be looking for at the moment. Yeah, and now let me show you what a market structure shift is. So as you can see right here, looking at it here, we're still looking for sales, isn't it? We're still looking for sales. Market is going down. We're expecting it not to break certain highs right there. We're expecting it to just do this, do that. It does what we want it to do, right? And now we get this movement. This movement breaks past that high, making this become now a market structure shift. Now when this happens, we immediately know that the market might reverse now and start going up, to fill some gaps and etc. Now we look at that, we take that into context, and like, yeah, we're shifting. It's time to move. And after this market structure shift, we know that, yeah, we can expect buys. So we wait for the market to continue doing its thing, does its thing, does its thing. You can see right here we get a break of structure to the upside. Get a break of structure to the upside. Right there. Like that. Break of structure, yeah, once we get that, we know, yes, we are going up, we're going up. Beautiful stuff, and it's what you love to see. It's what you love to see, because the market is showing proper movement and proper volume, as you can see, to move to the upside after that market structure shift. And this is basically how it would look. This is basically how it would look. Created a low, created a lower high, created a new low, and then created a higher high, breaking that, causing us now to be looking bullish in a bearish market. It's a market structure shift right there. As you can see, it won't break this low if it is to continue up. It won't break this low. It will just do that and keep breaking more highs, indicating more movement for us to go up, for us to buy, continue going up again and again. This is basically what happens in the market. This is how we know and can sort of predict where the market is gonna go. And yeah, you guys can see, here's another example. 1 2 1 2, continuing up, breaking structures again and again. Let's go again to this side. As you can see, we're in a down movement. Open it up if you guys want to see it properly with candles. We're in a down movement. Right here. Let's see, lows are being created. Lows are being created and broken. Lows are being created and broken. Again and again. Simple stuff really. But it is what you love to see. Right here. Lows being broken, indicating more down movement. But here, look what happens here. We fail to break that low, and what happens? We create a high, making this a market structure shift. Now, when we know this, when we see this happen, we basically know that now it's time for buys. Or it's time for the market to reverse and go fill certain gaps up there. But yeah, it's time for buys. As you can see, the market keeps going, breaking highs right there, failing to break the lows. Excuse me for that. Failing to break these lows. You can see it creates more highs and more highs again and again. This is basic and simple market structure. We show you guys a trade I took using this. Now, as you can see, right here. What time was this? So it's in the morning. London session. All right. As you can see, Asia, we are going down. So immediately after I saw what was going on here, is that we were going down again and again, breaking previous structures and proper bearish movement. When I got here, I simply just looked for my break of structure, which is right there. Broke structure again. This wasn't much of a concern. We'll get to that on a later video. Broke structure, indicating down movement. And what am I looking for right here? Sells. I'm looking for sells. Looking to sell the market, and as you can see, the market came into my supply zone. As you guys know from the previous video, I am a scalper, and this is the 3-minute chart. This is basically where I eat. This is my bread and butter every single day. This is what I do. But yeah, as you can see, the market did its thing, breaking structures. But what I like about here is that you can see a market structure shift, as it failed to break this low, and broke this high, broke that high, indicating upward movement, as you can see. But one thing I want you guys to know is that we cannot really predict the market as much as we want to. The market always does what it wants to do. It always does what it wants to do. And yeah, this is an example of it. I mean, if you were right here, you'd be expecting the market to go up now because you've seen your market structure shift, and you're expecting, yeah, we're expecting buy. But what I want you guys to note is that we did not get a break of structure after getting the market structure shift. We did not get a breakup of that high, indicating that you did that market structure shift might not have been valid, if I can say that. As you can see, we continue going down, creating lows and breaking lows, creating lows and breaking lows, creating lows and breaking lows, again and again and again. And that is basically what happens. Basically, this is it, guys. This is it. This is ICT market structure. This is it. Now I want to show you this trade because this is today's trade. I took this trade today. Yeah, let me show you what I was thinking, what I was thinking when hopping on into this market. So basically, yeah, 8 o'clock struck, and I was like, yeah, 8 o'clock UTC, which is a London session, of course. So 8 o'clock struck, and what I was looking at is right here. Unfortunately, this move had left me. And it was such a beautiful move because it tapped in my zone perfectly and left with such beautiful momentum. Now, when we got here, I was looking at these. I was looking at this zone and that. Now, what I want you to note, I then hopped on to the 1 minute. This is the 1 minute chart. And noticed on the 1 minute, we are now failing to break our highs. We broke this one, yeah. But now, after creating this one right there, we started making lows and lows and lows. I noted, yeah. After we took this one out, I noted, yeah, we're in a bearish market and I should be looking for sells. Now this is a 1 minute supply zone, but I did take it on the 3 minutes. But I'm just showing you this, guys. 1 minute supply zone came from breaking structure, as you can see. Broke that structure right there, indicating a bearish market. And all I had to do was wait for my setup. I waited for the fair value gap to be filled, and it tapped into my zone, and with proper reaction and volume, didn't even close within the zone. And that's when you know you have a really good setup in terms of scalping using supply and demand. That's when you know you really have a good setup. It doesn't even close within the zone, and I placed my sell stop right there, placed it there, and market tapped me in, and literally in one candle I was already out of the trade, which is beautiful stuff. But anyway, yeah, that is basically it for today, and that is basically simple market structure and how I use it to scalp the GBP USD. And yeah, with that being said, please don't forget to comment, like, and subscribe. And yeah, see y'all in the next video. Peace, bye bye, and subscribe. Your boy out.